while. I know. It's been a while. But I've been seeing some patterns with the market that I just could not ignore because a lot of people out there I know are thinking about investing in a time like this, which is actually a pretty good idea. Because when the market is low, that's really an amazing time for you to put your money in to the stock market. Now, there are a lot of investments that you can have. You can have investments in stocks, bonds, real estate, collectibles, and the list goes on. However, these are really the big four, and stocks just happen to be really the the best one. Well, I shouldn't say the best, but the most popular one. And and that's understandable because if you look at the stock market right now, the Nasdaq index, you see that most companies are not doing very well, and the stock prices as a result are very low, which is a very good indication that maybe you should think about investing. However, I wanted to tell you guys something about how to navigate yourself in a choppy market like this. So imagine now you have a company that's not doing well at all. Let's say you have a company that sold its stocks at $100 each share. Now you have during the pandemic the same company selling their shares for $33. That's 33% of its original baseline value that it had, right? So you would have a steep, sort of a steep fall like this. And that's what you really see with most of the companies that are on the stock market right now. Yeah, exception is Amazon, but that's because of a whole other set of economic reasons. But one way you can think about this is that since people are staying inside more often now, people are ordering more things online. Therefore, Amazon, as a result, is doing pretty well. They're backed up with orders, and none of my Prime shipping things actually get here in 2 days anymore. But I'm sure all of you are going through the same thing. Now, when it comes to the rest of the stock market, which is the majority of it, you're thinking about investing, let's say. How do you even start? So I would say really look at two things. Look for two things that's important, in my opinion. That's the most important. So the first one would be to check if, like, what kind of return you're expecting. So when it comes to returns, there are a few kinds where one is you want to put in a higher risk. You don't mind putting in a higher risk because maybe you have the capital for it, or maybe you think you're smart, whatever it may be. You don't mind putting in more risk. So you can put in more risk for potentially more reward. One example of that is short selling. That's one kind of investment. However, if any of you are thinking that you will just invest in some company right now and when they're really low, then once the pandemic ends, a short period of time, like in a week or two after this lockdown ends for all of us, you're going to sell it out and you're going to make a lot of money. That's really not going to happen for most of the stocks that are out there. So for that kind of investing, I would be very careful about what you're doing right now. However, there's one other kind of investing. Now, the reason I say you should be careful about this is because many economists and economic analysts are saying that it's really not going to be a bouncing back of the economy that's going to be a very steep shooting up kind of a trend that you see with stocks sometimes. Because, well, number one is that it's not an indication of a healthy economy. If you have a steep upshot of all the stocks in the stock market, that actually means that we're probably heading for a second crash sometime soon. And obviously, well, I shouldn't say obviously, it's probably not going to happen. Therefore, we're probably not going to see a steep upshot. If that's what you're trying to, if you're trying to buy low, sell high, it's probably not going to happen in a very short period of time. However, if you are looking to invest for long-term returns, and those are really the investments that I personally like doing a lot, and that is where you will put in money now because companies are really not doing well right now. So each of the share prices are very low, and as a result, you can take advantage of that situation. and buy a significant amount of share from a certain company, and then let's say a year or 2 years, or maybe even more if you're willing to wait longer, you can sell it off and you can make the rest of your money. And then there's one more way of investing, which is dividend investing, which is also something that I really like, but it kind of goes hand in hand with long-term investing. I will explain that if you guys want another video about that. But what I really wanted to focus on today is just about how you should navigate. So number one, you just realize what kind of investing you're looking for. If it's short-term gains, then I don't know if it just seems very unlikely that you can actually, we're going to have an exponential increase right after the pandemic ends. And yeah, as a result, I'm just telling you guys to be careful of that. And the other thing is, if you're doing long-term investment, I think this is a great opportunity for you to do that. Short-term, I don't know, but long-term, certainly. Now, how do you decide on what company you should invest in? There are so many companies on the stock market index. How do you know which one to go into? Now, I want to focus on the long-term investing, because for short-term investments, it doesn't really even matter, because when we're talking short-term, we're talking maybe days, maybe weeks. And within that period of time, it's very unlikely that a company is going to completely shut down and you lose all your money. It's very unlikely that that'll happen within that time frame, because even if it happens, news can break out. And as soon as, the investors, like let's say if you're an investor in a company and you see some news coming out about it and it says that, okay, they're losing a lot of money, they're thinking about closing down, you can just say, okay, fine, we'll just sell it. And then you can sell it anyways if that happened to happen within short-term investing, because all of it is happening within short term. So you don't have a problem letting go of it, right? But in the end, for short-term investing, what's important is as soon as you see the profit margin that you're looking for, you sell it all off. So for short-term, this is not really that big of an issue, right? It's not that big of an issue, because you don't need to hold on to your stocks, your stakes in the company for that long. However, for long-term investment, this does become an issue, because when we're talking about long-term investment, we're talking 6 months plus, 1 year plus, 2 years plus, 10 years plus maybe. And as a result, you want to make sure the company you're investing in is financially stable, so that they're not they're not likely to go bankrupt anytime soon, at least. The other thing is that they control a good amount of assets, so that in case something did happen, they have something to fall back on. Like, for example, we're going through a recession right now. Many companies are not doing well. And as a result, you can bet on the fact that many companies are not going to make it past the recession. Many startups, for example, I'm sure have lost their funding from investors or whatever it may be. So as a result, you want to make sure that the company has a good amount of an asset base, so that they can fall back on that anytime they go into those problems. The Fortune 500 companies all pretty much have that. And if they're really big, it's really sometimes the case that we see that they're too big to even fail. So their stock prices might go down someday, but if they're really big, it's unlikely that they're going to go bankrupt, at least anytime soon, and therefore probably in your lifetime. So all of these are the things that you really want to consider. And since we're in a recession time, the likelihood of bankruptcy and losing all your money is much higher than during any of the other times the market can really exist. For example, right before recession period started, sure, I'm sure some companies at least went bankrupt, right? That happens all the time. That's not something new. Could be a small startup, could have been a larger company, whatever. However, during recession time, you have a huge influx of the number of people or the number of companies that are really shutting their businesses down because they can't do their businesses anymore. Like, for example, cafes. Most cafes do not deliver. What happens as a result? They can't pay their overhead. They can't pay their rent, right? So the overhead contains the rent, whatever you spend in resources, all of that, because no customers are coming in anymore. As a result, they'll probably close down. It's unfortunate, but this is really the trend that we see during recession time. But when it comes to big companies, since they have so much assets, it's possible for the big companies to sustain themselves through a recession that might really be around for 1 year, 2 years, or maybe even longer. And as a result, I think it's important to take that into account. So if you have those two details into account, those two things that I talked about, the type of investment that you're interested in, and the state of the company before you invest in them, I think you'll be in good shape. Now is really a really good time to invest your money in something for long-term gains. I really believe that. Just be mindful of those two things. I mean, I'm not telling you guys about how to invest in a specific stock right now because I'm sure there are gurus out there, gurus who are telling you how to do it. So, I don't have to tell you guys how to do that. However, if you do want to see what I look at when I start investing, let me know in the comments below, and I can make a video about that sometime in the future. And I actually have a lot of time nowadays, so maybe I can do it pretty soon. But yeah, that's all for today, guys. Thanks.